Good evening, ladies and gentlemen. I'm Momita, moderator for the conference call. Welcome to the Avanti Feeds Limited Q4 FY22 results conference call hosted by KFin Technologies Private Limited. We have with us today from the management, Mr. C. Ramachandra Rao, Joint Managing Director, Mr. A. Venkata Sanjeev, Executive Director, Mr. Alluri Nikhilesh, Executive Director, Avanti Frozen Foods Private Limited, and Ms. Lakshmi Sharma, Company Secretary, Avanti Frozen Foods Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note this conference is recorded. I would now like to hand over the floor to the management. Thank you, and over to you.
Good evening, ladies and gentlemen. We extend a warm welcome for this investors conference call to review the audited financial results for Q4 FY22 as well as the audited financial results for the financial year 2022. Mr. Venkata Sanjeev and Mr. Nikhilesh, Executive Directors, are joining from the respective factories. Along with me here are Lakshmi and other team, K.S. Reddy, Mr. Mutyam Reddy, and the Company Secretary. The results of Q4 FY22 and audited financial results for FY22 are already with you for some time now, and we are sure that you would have gone through them. However, I would like to share with you some of the key indicators relevant for our discussion today. Firstly, let me take up the consolidated financial results for Q4 FY22. The comparative performance of Q4 FY22 with that of Q3 FY22 and Q4 FY21 have been given in the presentation already circulated to you all. Gross income in Q4 FY22 is 1,348 crores as compared to rupees 1,088 crores in the previous quarter Q3 FY22, an increase of rupees 260 crores by 24%. Compared to Q4 FY21, gross income of rupees 1,116 crores, there is increase of 232 crores by 21%. The PBT is rupees 121 crores in Q4 FY22 as compared to rupees 66 crores in Q3 FY22, an increase of rupees 55 crores by 83%, and compared to Q4 FY21 PBT of 93 crores. There is an increase of rupees 28 crores by 30%. The consolidated results indicate net impact of several factors such as increase, decrease in income, expenditure, and exceptional items, etc., relating to feed and frozen divisions, which have been discussed separately in the divisional performance of these units. Let me first take up the standalone financial results of feed division. Q4 FY22 results. The gross income for the Q4 FY22 is 1,050 crores as compared to rupees 819 crores in the previous quarter of Q3 FY22, increased by rupees 231 crores by 28%, mainly increase in feed sales due to February and January season for aquaculture. The gross income in Q4 FY22 increased to 1,050 crores from rupees 900 crores in the corresponding quarter of Q4 FY21, increased by 150 crores by 17%, mainly due to increase in sales volume and sales price. The PBT for the Q4 FY22 is 102 crores as compared to rupees 50 crores in Q3 FY22, an increase of 52 crores which is by 104%. The PBT in Q4 FY22 is increased to 102 crores from rupees 91 crores in the corresponding quarter Q4 FY24, increased by 12%. The significant increase in PBT is due to increase in volume of feed sales coupled with increase of feed price. Year-end 31st March 22 registered a gross income of rupees 4,108 crores as compared to 3,307 crores in the previous year, an increase by 24%. Increase is on account of increase in sales volume by 67,439 metric tons and increase in sale price during FY22. However, the PBT for the FY22 is 264 as compared to rupees 404 crores in FY22, a decrease by 140 crores by 35%. We observe that in spite of increase in gross income due to increase in volume of feed sales and the feed price, the PBT has come down by 35% compared to the previous year due to steep increase in raw material prices. As you know, there are three major raw materials, the fish meal, soybean meal and wheat flour, which significantly impact the RM cost of the feed. During FY21, the fish meal average price was rupees 93 per kg, went up to 101 per kg in FY22. The main reason appears to be shortage in fish catches coupled with large export demand pushing the price upwards. Similarly, the price of soybean meal also increased steeply in the past 1 year of FY22 compared to FY21. In spite of several steps initiated by the government, such as permitting import of soybean meal for a short span to check the unabated increase of soya, suspending trading of soya in NCDX, even with a good crop, the prices are not coming under control. Again, government is permitting import of soybean meal from 2nd May 22 to 39 22 to the extent of 550,000 metric tons. The average soybean meal price has been rupees 67 per kg during FY22 compared to rupees 43 in FY21. Average wheat flour price also increased to 24 from rupees 22 per kg during FY22 compared to FY21. However, of late, wheat prices have been going up steeply due to Ukraine war, creating global shortage of wheat and increase in export demand for Indian wheat. The prices of wheat flour went up to rupees 29 per kg, prompting the government to ban export of wheat from 13th of wheat from India with effect from 13th of May 2022. Presently, the price of wheat still remains at wheat flour still remains at 28 per kg, with no much expectation of a significant fall in prices of wheat flour. Increase in sale price of feed. In spite of increase in the average feed price realization by rupees 6.44 paise in FY22, 4 times increase, 2 rupees once, 3 rupees 15 paise once, 4.25 and 4 rupees. Due to steep increase in raw material prices, the raw material cost increased by 10 rupees 58 paise per kg, leaving a difference of 4 rupees 14 paise unabsorbed. However, in course of time during the year, the prices of fish meal, soybean meal and wheat flour are expected to stabilize with the marginal increase due to actions initiated by the government in respect of soybean meal and wheat flour. Now, coming to the shrimp processing division, Q4, the gross income for Q4 FY22 is rupees 300 crores as compared to rupees 270 crores in Q3 FY22, registering a growth by 30 crores at 11%. The gross income in Q4 FY22 increased to rupees 300 crores from rupees 218 crores compared to corresponding quarter Q4 FY21, an increase by 38%, mainly due to increase in sales volume by 21% and recognition of RODTEP income of 16 crores pertaining to January 21 to March 22, 15 months. However, for the year ended 31st March 22, gross income registered an increase of 15% to 1,017 crores as compared to 888 crores in the previous year. The increase is mainly due to increase in sales volume by 1,318 metric tons from 11,518 metric tons to 12,836 metric tons. The PBT for Q4 FY22 is 21 crores as compared to 26 crores in Q3 FY22. A decrease by 5 crores represents 20%, mainly due to increase in RM costs and marginal increase in ocean freight. The PBT in Q4 FY22 is 21 crores, increased from 1.48 crores in the corresponding quarter of Q4 FY21. In fact, the PBT in Q4 22 of 21 crores inclusive of the rupees 13.17 crores of RO DTP pertaining to earlier period, leaving effective profit from the quarter at rupees 7.83 crores. In Q4 FY21, MAS incentive to the extent of 12 crores was reversed, resulting in an effective profit of 13.48 crores. Therefore, effectively, the PBT has marginally decreased by 5.65 crores. However, for the year ended 31st March 22, the unit registered a PBT of rupees 100 crores as compared to rupees 188 crores in the previous year, a decrease by 7%, mainly due to increase in the ocean freight rates. Status of recall of products by Frozen Foods Division. As you are aware, the company had to recall some of the consignments of cooked shrimp products found to be with salmonella contamination by US FDA and CDC in the recalled products. The recall had to be made twice in June 21 initial and August 21 expanded. The recalled products are not allowed to be brought back to India, and they had to be destroyed in US itself. As a result, the company is liable to compensate the US customers for recalled products and related expenses of destruction charges, etc., to the extent of the products returned and destroyed. The company is also liable for reimbursement of medical and related expenses to the consumers who fell sick and underwent treatment after consuming the recalled products. Insurance coverage. The company has product liability insurance covering the medical and related expenditure mentioned above. However, there is no insurance coverage in respect of reimbursement of products returned and destroyed, and also other related expenses such as product destruction charges, call center charges, storage expenses, etc. This cost has to be met by the company. Provisions in the financial statements. In FY22 accounts, provision has been made for a sum of rupees 27.50 crores, that is, for the first quarter Q1 FY22, 4 crores 10 lakhs, then Q2 FY22, 17 crores 15 lakhs, and Q3 FY22, 6.25 crores, and as an exceptional item towards value of returned destroyed products and other related expenses on actual basis, and as and when the claims are received on a quarterly basis, out of the said provision, an amount of 9.04 crores has been refunded to the customers in FY22. The provision in the financial statement has been made on the basis of return and destroyed value of the products together with the related expenditure as stated above, which has come to rupees 27.50 crores. As regards the claim for bodily injuries caused by consuming company's contaminated product and a recall, the company's insurer, the New India Assurance Company, has appointed a surveyor for processing of the claims. So far, the company has received 13 claims towards bodily injury, which have been forwarded to the insurance surveyor for processing. Since the liability has been covered under the commercial general liability insurance policy, no provision has been made in the financial statement. The extent of claim in financial terms is yet to be ascertained by the surveyor. The present status of termination of recall and reinstating a green list status. The company received communication from US FDA stating that all the information and documentation required from the company have been received by them, and it will take some time to terminate the recall, which will be informed in an automated email. The company has shipped out 5 containers of cooked shrimps, and on clearance of these containers by US FDA, the green list will be restored, lifting the red alert, which is expected in due course. Once the red alert is lifted, the company will be in a position to accelerate export of cooked shrimps. Industry overview, future outlook. The recovery from the impact of COVID-19, which affected global economy during the past 2 years, has significantly improved, which is perceivable in the growth of the global economy. You may notice that the performance of the calendar year 2021 was much better than calendar year 2020 and is expected to be still better in calendar year 2022. At the start of this year 22, the environment for shrimp culture in the country started favorably and the shrimp culture commenced promisingly, registering a growth of 3% during Q4 FY22. Significant growth is expected in FY23 in terms of feed sales and production of shrimps in the country as the culture progresses in the rest of the period of this year. The total production of the shrimp is expected to increase as the farm gate prices are at all-time high and the remunerative and climatic conditions are favorable. The company estimates that India should be able to produce 8.5 lakh metric tons of shrimps with an estimated consumption of about 13 to 14 lakh metric tons of shrimp feed. Shrimp production and feed consumption in FY22 and company plans for FY23. Shrimp feed consumption. The shrimp feed consumption in India increased to 12 metric tons in FY22 as compared to 10.5 lakh metric tons in FY22. It is expected that consumption would further increase to 14 lakh metric tons in FY23, an increase by 17%. The company's feed sales during FY22 was about 5.41 lakh metric tons as compared to 4.73 lakh metric tons in FY21. It is expected for FY23 would be around 5.80 lakh metric tons, an increase by 7%. The company is expected to maintain its market share at about 50%. As the demand for shrimp feed is expected to increase, the company has almost completed setting up a new shrimp feed manufacturing facility at Bandapuram with annual installed capacity of 1,75,000 metric tons with a capex of 125. The new facility is scheduled to commence commercial production in June 22, that's next month. Shrimp processing and export. The shrimp production and export from India increased to 7.5 lakh metric tons in FY22 as compared to 6.5 lakh metric tons in FY21. It is expected that the shrimp production would further increase to 8.5 lakh metric tons in FY22, an increase by 13%. The company's shrimp export during FY22 was about 12,836 metric tons as compared to 11,518 metric tons in FY21. It is expected that for FY23 would be around 14,500 metric tons, an increase of 13%. Avanti Frozen is in the process of expanding pre-processing, main processing and cold storage as detailed below. Number 1, pre-processing facility in Gopalapuram, an existing processing plant adjacent to the existing processing plant, completed and awaiting final approval to start pre-processing with a capex of 11.43 crores. The new cold storage at Eravaram processing plant with 2,000 metric tons capacity. Work is in progress and the estimated cost is about 17.60 crores. The new processing plant and cold storage in Krishnapuram, East Godavari district with a capacity of 7,000 metric tons per annum. Land acquired, civil works to be commenced. The estimated cost is about 49 crores. I think I would like to conclude with a positive note that aquaculture industry is poised for a relatively improved performance in 22 calendar year compared to 21. With this, I conclude, and now we will take up the questions.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Participants are requested to restrict their questions to 2 per person during the initial rounds and may join the queue back for follow-up questions. So our first question from Mr. Nitin Avasthi from InCred Research. Please go ahead, sir.
Hello, sir. Thank you for the opportunity. My first question would be relating to the incentives that got passed by the board. So now the incentive to the management can be up to 15%. However, there is a question in most minds where only the pay to non-executive directors has been capped at 1 crore. Whereas the remaining executive directors, there is no cap. Hence, if you have to go by this, the remaining percentage, Avanti's management executive payroll could become the highest paid executive director board in the country. So why not put a cap to it? Let's say an absolute number like you have put for the non-executive directors.
That's all your question, Nitin?
That's the first question, sir.
First question. Okay, right. Okay. Yeah, next question. Now you want me to answer that question and go to the next question, or how is that?
You can answer this question. You can answer this question and we move to the next one.
Okay, yeah. So Nitin, let me tell you. See, this managerial remuneration, the topic had come earlier in the extraordinary general meeting, and it has been approved. So it is inclusive of two components. One is the fixed salary and also the commission on profits. So as far as the fixed salary is concerned, it is on par with what is cost of living, etc., and other things for the hard work that the executive whole-time directors are working. That is fixed according to the standards of living and also to the general cost of living going up, and this is for 5 years. That is one part. The second part is the commission. Though we call it a certain percentage is fixed in the resolution, but the overall cap is there for up to 15%, which includes the three whole-time directors. So I would say, I think the apprehension or whatever the concern about what you expressed now seems to be that if it is for 400 crores or 500 crores, it will go up to 30 crores, 60 crores or 70 crores like that. So let me tell you one thing. See, as far as the fixed the remuneration is concerned, it has to be given, is it not? Because they are working as a whole-time employment of the company. Okay, that will be given on par with the. So if you look at the resolution which we have passed last time, the increase that is given to the directors was much less than the average increase that is given to any senior executive of the company. See, the senior executive gets an annual increment of 15%, whereas we have given only about 5 to 6%. The average increase is given. So as it goes, naturally the fixed expenses goes, but the cap remains. Whatever the 5%, the 15% what we have fixed is among the three directors, that is inclusive of this amount. So if you say that if a company makes 500 crores profit, naturally what should be the top line of the company? What should be the activity? Let us say if you take 15% into 500 crores, it has to be 8,000 crores. Is it not? 7,500 crores, it should be the top line to get a profit. So does it happen just like that? So the director gets the percentage of commission only when there is a profit. The increase in profit only he gets, otherwise he will not get it. But see, whatever is left out in the cap, only to that extent he gets. Just because the resolution says that the director is entitled for 4% commission, it does not mean that it is a 4% is straight away paid on the profits. The 4% is the total, they take the total, consider the salary, regular salary plus the commission, and is restricted to 4%. I mean, I really, see, this as we have discussed several times, and I have also given the reasoning for that, and I have really, I don't know the reason why you are so much concerned about it.
Okay, sir, fair enough. I'll move to my next question. My next question was on the inventory part. The inventory this time reported this time around is close to 1,000 crores. So if you could give us a breakup of what the inventory holds.
Yeah, I'll do that. The inventory, Nitin, the basic, the major, the inventory items are fish meal and soybean meal. As you know, the raw material prices have been going up very steeply. So we decided that for the next season, which will start from April, May, June. In fact, it started early this year, maybe in the February month itself in January. So we started procuring raw materials, soybean meal, soybean meal, and also fish meal as and when it is available, because the trend was the price going up. So as much we keep the stocks, that advantage would be there. That is number one. So that's we started. I'll just give you the quantity and the values that we had on. If you compare with the 31st March 21, we had fish meal of 12,514 metric tons, worth 117.78 crores. As against that, in 22 this year, we have 22,514 metric tons with value of 241.99 crores. Then coming to the soybean meal, it is 10,274 was the 31/3/21 stock with a value of 53 crores. And the current year, the 31st March 22, we had 28,568 worth 197 crores. See, these two items themselves together, give an additional inventory of 270 crores. So this is very, very important, because if we can control raw material cost can be taken on an average basis, the impact of the increasing will be minimal on the company. That was the policy we have taken, and we have bought it. That's the reason why your balance sheet shows the higher inventory levels.
Got it, sir. The last question from my side, export incentives, have they been booked for the quarter? And if not, what is the current outstanding export incentive, and what was the export incentive for the last quarter?
The export incentives. See, what has happened is, Nitin, these export incentives, because of uncertainties, the accounting part of it had to be adjusted in accordance with the developments that are taking place there. For instance, RODTP, though it is declared, it did not really come on to the effectiveness, and claims were not accepted for a long time. So later on, so we decided that only when the government starts releasing these scripts RODTP, then only we will take into consideration. That was the stand taken by us in consultation with the auditors. That's how we have done it. See, let me read out. You just read out here. My colleague will read out the how much the RODTP is. And
for Q4, the total incentives recorded was 23.47 crores, out of which 16.29 crores is the RODTP income pertaining to 15 months period, and 7.18 crores is the duty drawback. So in corresponding Q4 of FY21, it was minus 6.24 because we reversed 12 crores of MEI incentive pertaining to FY21 up to 1st September because there was uncertainty of getting the amount, so the recognition of revenue was postponed, and which was realized in the FY22, and we have recognized the same in the Q2 of FY22.
How much is the total amount of RODP yet to be recognized?
Up to 31st March, entirely recognized.
I tell the amount.
Yeah, it is 16.29 crores.
16.29 crores, Nitin. See, that's what the accounting was. Whatever when they started, only we started accounting it. And as of 31st March, it is only 16.29 crores, which pertains to the FY22.
Okay, sir. Got it.
Okay.
Thank you. I'll get back with you.
Okay.
Thank you, sir.
Thank you, Nitin.
The next question from Mr. Omkar Gugadre, 3 Investments. Please go ahead, sir.
Yeah, the new plant which you told just now that will be commissioned next month. So what would be the... Yeah, so just wanted to know, to start with, what would be the capacity utilization for that plant for the full year you are expecting, and what would be the peak capacity at 100% capacity utilization? What kind of sales it can generate? And
see, the capacity, installed capacity is 175,000 metric tons per annum. So as far as the utilization is concerned, we expect, going by the demand that we are having today, we should be able to 100% utilize the capacity in this year itself. So, because we have now we are facing a lot of shortage of supplies to our farmers, so there has been a lot of pressure to us. So we are just the project got a bit delayed, a month delayed. So we generally thought that we should be able to cater to the demand for the May itself, for the month peak season. But unfortunately, there was logistic delays and getting the capital imported machinery from Taiwan. It was delayed, and now everything is in place, and we should be able to start June. In month of June. So what we expect is that month-wise, if you look at the capex utilization, the capacity utilization will be 100%. Going by the demand, we should be able to fully utilize the capacity. In fact, we may even by next year there might be some shortage also. That's what our expectation as of now.
okay, and what about the shrimp feed capacity? I mean the value-added shrimp capacity which you just told. What about that, which you are expanding?
That's what the capacity which we are expanding, the feed capacity, it is 175,000.
Yeah, sir, I got that. I was asking about the frozen shrimp.
Frozen shrimp, there are, we are going, the expansion in 3 as explained to you just now. One is the pre-processing facility in our earlier plant, Gopalpuram, is an old plant. That there, by the side of that, we have started a pre-processing plant with an investment of 11.43 crores. That should be, actually, we have everything is ready. We are just waiting for the clearance of, government agencies. We should be able to get it, and we will start with that. That is a pre-processing capacity. So that facilitates the faster the processing of the main processing procedure. That's what I think. Niklesh,
Yes, sir.
Niklesh,
Yes, sir.
Are you there? Yeah.
Yes, yes.
Can you please explain these 3, particularly, the facility when we start, we should be able to add up to our processing capacity also in Gopalpuram once we speed up the pre-processing facility. Is it not?
Yes, sir. So basically, the first investment is the pre-processing facility to just because the Gopalpuram factory is almost, it was built in 1997. I mean, it was acquired in 1997, so it's been almost 20-25 years since we got it. So we needed to build a new pre-processing area to first comply with some of the customers' requirements, and also second, enhance our pre-processing capacity. So the pre-processing capacity, this is when you're looking at the capacity utilization, we give you the freezer capacity. So to utilize more of the freezer capacity, we have to enhance the pre-processing capacity, which was done. So Gopalpuram now, from this year, able to run almost at 100% capacity in the season, which is the high season. Right? Second investment is the cold store at Yadavaram at a new processing facility. We're just expanding the cold store since we are spending a lot of money to hold our finished products or raw materials in third-party cold stores where they might compromise the cold chain, especially with the high fuel prices. They might compromise on the cold chain. and also to have more capacity to hold raw material for the off-season time. It's more like the cold store, it's more like the warehouse in the processing business. And the third one is we're building a new facility in Krishnapuram. The land acquisition has been completed. This will be, as you are aware, Avanti Frozen has been selected by the government for the PLI scheme. Under the scheme, we are building this facility. The total outlay as of now, as Mr. Rao had stated, is about 50 crores. So we're going to start the construction soon. We're just looking for the government permissions to start the construction. So this will enable us to further increase our capacity and also increase our exports, focus on some of the products that we have not been able to deliver to the customers, and also enable us to get an additional green ticket to help us with the regulatory passage with FDA.
Okay, thank you. The second question is on the cash which you are holding on the balance sheet. Earlier you said that you are working seriously on fish feed this time. So what is the status on that? And apart from fish feed, how do you plan to utilize the rest of the cash, apart from buying in advance the raw materials?
Yeah, see, the thing is that this question was repeatedly asked, but anyway, we have to always take into consideration the two important aspects, Mr. Omkar. One is that the expansions which we are thinking, we thought of this fish feed long back, but we are ready with all the technology and everything is ready. In fact, we wanted to start simultaneously with this Bandapuram expansion, but somehow we thought with the speed which still this COVID effect was there, we have not been able to really plan it. Now we are again going for this plan very vigorously. We are working, and we are looking at another couple of other projects also, animal feed only. But I would like to disclose this as and when we are with the concrete numbers. We will definitely there will be some expansion programs happening in the year as we progress. That's number one. The number two, coming to the cash, the available cash. Certainly, see the working capital. What we consider is a very, very timely, funds availability for us at the time of real crisis. Let me tell you. So you may say anything because the long-term fund should be used for long-term investment and all is fine. But in a situation like this, what we are going today, the raising about 50 crores or 100 crores or even 500 crores is such a big task. So when we want 400 crores, 500 crores, what you have seen at the end of the year. But prior to that, we had invested more working capital. Because what happens is in the fund circulation, see, we have certain discount systems and all, turnover discounts, etc. All these are given in the end of the year. So what happens is we don't give them cash, we give them only credit. We will supply the feed. With the result, we don't get the cash flow gets little slowed down. We don't get the cash flow. So that time, that is a peak time when we want cash also for our working capital needs. So that is where we use it. But we consider that this fund is really helping us a lot by providing the required the funds available at the time of crisis. And particularly this year, we found the need of it. If you go to the bank and ask for 100 crores, you know how much strain it is to get 100 crores from them. But we have comfortably, we have been able to maintain the stock levels. As compared to any other feed manufacturers, our position was very comfortable. So that is one important point. Coming to the expansion, anyway, we will come with some concrete proposals in the course of time, as which are very seriously considering, as you said, the fish feed and also the animal feed, which are the other opportunities that are being seen as potential. We will come with this in course of time. Okay.
Can you give a specific timeline to that, sir? Because it has been in the pipeline for so long.
Sure. See, the question is that we give the timeline once we are through with our plan. A roadmap has to be made. No, the DPR is being prepared. Once the DPR is ready, then we will be able to give you the timeline. That's what I said. It will take some time. Once the decision is made, definitely it will be shared with you.
Okay, at least you can give a broad. Yeah.
I'm sorry to interrupt, sir. If you could please come back in the queue for follow-up questions.
Yeah, sure.
Thank you. So our next question from Mr. Vinayak Mohta from Stallion Asset. Please go ahead, sir.
Hi, good evening, sir. I majorly had a question, regarding the margins on the shrimp feed business. So you had broadly had a 7% margin last quarter, and around February you had said that you'll be going for a price increment broadly around March first week. I just wanted to understand, given the raw material prices, were already up, and I'm not aware if they had corrected so much for the margins to expand, and what would be the trajectory of the margins going into FY23 over the quarters? Like, what is the trajectory you're seeing with regards to 10% being maintained on the feed business?
Yeah, Mr. Mehta, your question is really very tough to answer because there are so many uncertainties to tell you what is going to be the percentage margin for the FY23. Because today we are in a position that none, including the government, is able to tell what is going to be the prices of the products, particularly the agri products, which are well within the government's control, supposed to be in government's control. They have no clue about it. See, I can explain you that when we told last time, the prices would come down, definitely, because the wheat crop was good, the anticipation was good, and we thought that the amount of the good crop that is coming and the comfortable food storage situation in India, the food security laws well above the 3 months level, that is as per the Food Security Act, about 4 months they had stocks. And with all that, we thought that the wheat flour prices would come down. But what happened? Something else happened. The Ukraine war started, there is a shortage, and it shot up like anything. So the price which was there at 22, we thought it went up to 24, we thought it will come back to 22. But it did not happen. It went from 22 to 28. See, the total, and the government of India, they took a decision to export wheat. The wheat, such an essential commodity, they decided to export it. They permitted it and immediately realized that the wheat started exporting. And again, it's going up. They on, I think, 13th May, they decided to ban export of wheat. But with this one clause, they're saying that already which is lying in the ports will be allowed to be exported. So, essentially what happened is those who have already purchased the first crop of wheat flour have already taken it to their warehouses and kept it ready in the godowns for export purpose, and they are permitted. I mean, in no way that really has brought the prices of wheat down. There is no situation difference. So what we are expecting is whatever left out after cornering the stocks by the traders and exporters, whatever is left is to come into the market and it start. On 13th May, I thought that the prices of the wheat flour will come down next day morning, but it has not happened. 13th is over, today we are on 19th. Still it is on 28 rupees, 27.50, 28 rupees. This is the situation. So we are only hoping that in course of time the prices will start coming. The same thing situation with the soybean meal. See what happened, soybean meal, 3 days back it was low. 3 rupees went up in 3 days. The reason you know what it is, because the Madhya Pradesh traders, the soybean traders, they went on a strike. The mandis are closed because government has stopped the export of wheat. They banned export. They want export of wheat. See, this is the kind of policy that's there in the government, and how any company can say what is going to be the raw material price. We are very much dependent on wheat flour and soybean flour. These two together will cost around 60% of our raw material cost. Coming to the fish meal also, it depends upon the catches. And also there is a lot of demand for export demand for fish meal. So there are so many uncertainties, but yet you should appreciate that your company has been able to plan to a great extent to contain the cost of raw materials by various steps that they are taking and trying to manage and give the returns as much as possible. And coming to that 7% to 10%, that again we are working very hardly to see that when the one way by which you can go up, the volumes can increase so that in absolute terms the profits can increase, so we can pay a better dividend to the shareholders, investors. That's why we are trying to increase the volume by having more expansion and to keep our market intact. In fact, we are adding and we are increasing the market share by 1%, 0.5% year after year. And you know that after reaching 50%, it is very tough to go further. But we have been successful to some extent by getting more and more conversions to our company. And that is one way by which the volumes of the profits will go. Thereby, the shareholders will get a better dividend which we can pay. These are the measures we are taking as far as in terms of strict margin per kg or percentage point of view, that is 6%, 7%. It all depends again on the pricing. As you know, the percentage determines between the price of the feed and the raw material cost. The price of the feed, we cannot go liberally by increasing the price to absorb the additional cost. There are so many regulatory agencies, the farmers are there. We should take care of the culture, aquaculture, so the farmers, they should carry on the farming activities so that our sustenance depends on their sustenance, their success. So we have to be very balanced in our approach when we increase the price. And in addition to that, we have the regulatory agencies like the governments, which they are in the interest of the farmers. They say that you cannot increase the price. So like that, there are different forces which are working at what you call cross currents. So we are working under that situation, and it is very difficult to commit what is going to be the 23 financial. But definitely, it is our endeavor to get the maximum return on our investments, and we get the better yield returns on our investments and pay better to our stakeholders, particularly the investors' interest. Okay.
Understood. Just the second question would be, are you facing any problems on procurement of these raw materials from different places? And also, is the demand, are the farmers and all working there's no mismatch between the supply and demand as of now on the feed front, right?
In fact, we have got more demand than what we are able to supply. That is the situation now. That is the reason why we are speeding up, and Mr. Venkat Sanjeev is on his toes to complete the project, because the chairman is after him. CMD is after him to complete the project. And so we are getting calls from the dealers, we are getting calls from the farmers, day in and day out. Our marketing team is on toes. So because there is a lot of pressure, because see, we have not been able to supply the feed to the farmers, the dealers. So almost 24/7 they are working now. So once they complete that, the target is that by end of this month they should complete everything and start off commercial production. So they have to take the trial runs and do it. That's what they are working. It says we will be able to, at least for the timing, we will be able to meet the present shortage. Absolutely. See, there is no dearth of demand for our product, because our product is preferred in the market as number one product. So there is no depth of market for our product. It is only we have to increase the production and supply it. As far as the raw material is concerned, see, as you know, that we have been very we have been maintaining a good relationship with all our suppliers, and we are prompt in our payment, but we are very strict in our maintaining the standard specifications of the raw materials. So they are very happy, and we never had any problem with any of the suppliers. But natural, like the shortage of soybean meal, wheat flour, or shortage of fish availability and all, we cannot help it. But certainly, we are on the forefront as far as the supply situation, raw material supply situation concerned compared to other feed manufacturers.
Understood. Just one last thing. In the midst of such a strong demand for your products and everything, is it fair to assume that you would be looking at a 20 to 25% growth for the year because you're expecting full utilization and there's a lot of demand? Yeah. So on that front.
See, there are several factors. The first thing is that there should be shrimp culture growth to that extent. Then only the demand starts. Okay. See, if the shrimp production goes up, naturally feed production goes up. See, today enough the capacities are there. We should be able to supply. There is no problem in supplying the required feed. But only thing is the growth of the entire industry should be there. Particularly the production of shrimp culture should go up. If it go up, we are always ready to supply. Whether it is even 20, 25, 30, we don't mind. We can always supply to the needs of the farmer, to the market.
Understood. Okay. Thank you so much. All the best.
Thank you, sir. The next question from Mr. Dipesh Kashyap from Equirus Capital. Please go ahead.
Yes, hi sir. Thanks for taking my questions. Sir, on processing, if we take out the incentives that you have booked in this quarter, the margins in the processing segment seem very low. So just wanted to understand the reason for the same and how should we think about going forward?
Yeah, see, of course, Nikhilesh will supplement whatever I say. That one thing is that the margins decrease can be attributed to Nikhilesh slowdown on the export of cooked shrimps due to recall, which we have slowed down a little. Once we pick up the shrimp production, export of cooked shrimps, definitely the margins will improve. Number one. Number two, the raw material costs have gone up all-time high, and the export prices have not gone up proportionately, thereby leaving there is a gap. That is the one major reason. Number three is the ocean freights have almost, it's like skyrocketing. We have not been able to control it at all. These are the three major reasons what I could see, the reasons for decrease in the margins. As we progress, once we are clean with, as Nikhilesh explained, that one we are through with the the FDA clearance of these 5 containers and getting green, then naturally we are ready to push the cooked products and the value-added products, which is where you have more value, more margins are there, and that is really that is going to be the real cream of the entire activity. I think Nikhilesh, you may please supplement.
I think Mr. Rao put it out perfectly. Those are the three main reasons. Stopped shipping out some of the value-added products to the US market, which is a dominant market. But we are in the application process to be reinstated on the green list. It's a procedure, and I think in the next few months we should be reinstated. But of course, it depends on the regulatory decision. But we are working towards it. So that's that. But on the I think bright side about this situation has been that we have focused on introducing value-added products while our cooked lines in the Yerravaram plant have been down. We're about to launch our breaded products into the US market. We are starting off trial production, etc. So that's going off well. So the main important part, apart from the cooked shrimp or the ocean freight, is also the high raw material prices being driven by inflation. The the raw material prices and the cost, including the ocean freight, have been much higher than the price increase in the US market. So that is the main driver than the cooked products. Like our ocean freights are high, our packaging is very high now, our electricity cost is very high, the AMC cost put in the government of Bangladesh has quadrupled. So these costs have added or have eaten into the margin, but we will continue focus on introducing more value-added products so that we can maintain our margin. And once our cooked green ticket is back online, we should be able to move out more volume at a sustainable.
Got it. Thank you. Second question is mainly on this new processing plant that is coming, right? So what is the timeline that you expect it to come? And secondly, Rao sir, if you can also talk about the price hikes you have taken in feed in the month of March and April. So how much was that? Thanks.
So I'll answer.
Yeah, I think Niklesh complete. Yeah, please go ahead, Niklesh.
Processing plant, like saying that the manufacturing has been completed. A large factory like our Yaravaram factory, it's a smaller facility. The main target for this is to increase capacity utilization, and the second one is also to add a line so that we have only cooked in the Yaravaram facility, so we need another plant with a cooked facility. And also we have requirement for certain products cannot be produced at our existing two facilities, so it will need a new flow. So that's what we put up in this facility. So the timeline would be within the next 1.5 years that we finish the whole and into commercial production. The reason being, when we're talking about the food processing facility, there are a lot of regulations. We need to be extremely careful, check all the water pipelines, check all the airflow, etc., the drain flow, to make sure there's no cross-contamination and potential hazards to arise out in the factory. So 1.5 years is an estimated timeline.
Got it. Yeah.
Yeah, coming to this feed price increase, see, I'll start from the latest one. The latest one which we took in the month of April is at 2 rupees per kg, and earlier to that in March we took at 4 rupees per kg. These are the two recent listings. And earlier to that we have taken in August 21 at 4 rupees 25 paise, in May 3 rupees 15 paise, and in April 2 rupees. So totally I would put that 2, 5, 9, about 14, 15 rupees we have taken. About 15 rupees we have taken, but the cost is still, it is around about another 4 rupees, 29, 30 rupees is the cost increase that has gone up in the last 1 year, 1.5 years. So we are still, there is a gap. We are trying to somehow by other method, by cost reduction, productivity increase and all, we are trying to do to cover, to absorb that additional cost also. We'll have to see. That is the situation. Okay.
Got it, sir. So also if you can give the current fish meal, soya meal prices, sir, what are they going right now?
Current prices of the soybean meal, the fish meal is 111 now. Fish meal is 111, and soybean meal, soybean is 19. Fish meal is it's about 111, 112. It is 19. 90, soybean meal is 19,000 per metric ton. Sorry. 60, yeah, so about 69,000 per metric ton soybean meal.
Okay, it is same as the average price of last quarter, right? So it is similar to that.
Yeah. See, we have booked, recently we have booked, when the government permitted import, we have booked 14,000 tons, which we are expecting would cost us around 54 rupees. That is a very, very normal standard grade, but we don't use that grade. That grade is today in India, it is around 57, 58 rupees today. It's the imported price is 54. That would be we normally use most of our product is with the high protein, which will be higher by 5,000 rupees more per metric ton. The normal plus 5,000 is our cost, high protein.
Got it, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, the next question would be the last question for this call. It comes from Mr. Ayush Mittal from Mittal Analytics. Please go ahead, sir.
Good afternoon, sir. First of all, sir, I would like to appreciate the company that we have done pretty well in this quarter given the way the things were. And it's good to see that we have got back to our margins in feed despite so much of raw material pressure while other peers have not been able to do well. So congrats on that. Sir, two questions. So first, when we look at the balance sheet, we are having a very high inventory this time. It is almost more than double of what we have. While when you have given the growth for this year, on the feed side, you have given about 10% growth. Similarly, on the processing, 10% growth. While for the industry, you are talking about a higher growth. So why is it so? Why is this mismatch there?
I think Ayush Mittal, I don't know. Your question is like if there is a growth, there should not be inventory. Is it what you are trying to?
No. What I'm trying to say is that we are talking about, I think in your opening comment, you mentioned that you're expecting 10% growth in the feed and about 10-12% growth in processing. Is that right?
Yes.
For the FY23?
Yes.
While we are talking of a higher growth in the industry and also we have built so much of inventory. So why is this mismatch there? Like so much of inventory we have built up, but this is only for the seasonal nature, or is it that we can do bigger volumes?
I don't know. Just let me explain to you, sir. See, the inventory is not of finished goods. The inventory consists of raw materials and finished goods. In fact, the finished goods is the very, very minimal finished goods inventory. The inventory is mostly two raw materials, as I first explained. One is the fish meal and the other is the soybean meal. These two are scarce items in the country today. All the three, because soybean meal, whether it is a feed manufacturer's consumption or a human consumption, there is a shortage. Similarly, there is a shortage of fish meal for all the industries which are making this using the fish meal. So these two items required to be stocked in a huge quantities before the season starts. So what you are seeing in the balance sheet is on the date of 31st March, which happens to be the financial year ending date, which coincides with the commencement of our season subsequently April, May, June. Okay, so that's the reason why we keep enough stocks for production in May, June, April, May, June. But this year, we have kept more than what is required. See, normally what we do is, when the soybean was freely available in the market, we were only storing around 15 to 20 days only. But now, because there is a shortage of soybean, we have increased the stocking levels to 1 month. Now, so because the same thing, even the fish meal, we had about 20-25 days stocking levels, minimum stocking levels, there we have increased to 1.5 months. Because of this increase in the stocking levels, then naturally the inventory will go up. So that the inventory is required for utilization in the subsequent months, April, May and June. It is not that we are keeping the inventory levels throughout the year in the same level. Okay, yeah. So that is the reason. So if you don't store it, you don't improve the inventory level at the beginning of the season, then you will end up in paying higher cost during the main season. So for example, in the month of June, July, there is going to be the fishing ban in the western part of the country, where from we are getting huge quantities of fish meal. Once there is a ban, then you will not get fish meal in month of June and July. So we need to keep this fish meal stock enough for our consumption in not only April and May, but June, July, August also. So by the time the fish meal supply starts, it will be somewhere in August 15th afterwards. So we should keep sufficient stocks And that is the main season for shrimp culture. So we need to utilize our production capacity and supply feed to the farmers.
Sir, I understand what you're saying. What I was trying to say was that as you are expecting the industry to grow at 15 to 20%, like the data that you shared.
Not 15 to 20%. See, that is a wishful thinking. So when if the production of shrimp grows to 30%, 25%, definitely we also register that growth. See, normally the 10 to 15% is a reasonable, anticipation or expectation of growth, which we feel comfortably we can reach.
Okay. Sir, the cost of the inventory that we are holding, this is in line with the cost that we had in Q4 of this year?
Q4, that is cheaper actually. What we have is cheaper than what we have now. The present prices are higher than what inventory cost that we have as on 31st March. So we are at the advantageous position. If we were to buy today, it would have costed much more to us.
Yeah. Okay. Thank you.
Thank you, sir. Ladies and gentlemen, due to the time constraints, we would like to come to the end of this conference. On behalf of KFin Tech, we would like to thank the entire team of Avanti Feeds for giving us the opportunity to host this call, and we appreciate the interest from the investors and analysts for the participation. Thank you, and if you need any further information, you may connect with Mr. Sahil Shah of KFin Tech at sahil.shah@kfintech.com. Thank you for using Dursabha's conference call service. You may disconnect your lines now. Thank you and have a good evening, everyone.